Hello and welcome to Invest to the Moon, where I analyze and organize the stock market around the events that matter. In this video, I will be looking at the fourth week of April 2023, which was a busy week for investors. Before we begin, please make sure to subscribe to my channel and hit the bell icon to get notified of new videos. Let's start with the big tech earnings results. Microsoft and Google's parent company Alphabet reported quarterly earnings after the stock market closed on Monday, April 24th. Both companies exceeded expectations, with Microsoft reporting a revenue of $44.3 billion and Google reporting a revenue of $55.3 billion. These impressive numbers reflect the strong demand for cloud computing, online advertising, and digital services amid the pandemic. Both stocks rose sharply after the announcement, boosting the Nasdaq Composite Index. However, not all companies fared well in the earnings season. UPS reported a significant decline in logistics, which some analysts saw as a precursor to a recession. UPS is considered a bellwether for the economy, as it delivers goods to consumers and businesses around the world. The company blamed the drop on higher costs, lower margins, and unfavorable weather conditions. UPS stock fell more than 10% on Tuesday, April 25th. Another factor that weighed on the market was the possibility of commercial real estate-related bank failures. There were concerns that rising interest rates and declining property values could lead to defaults and losses for banks that lend to commercial real estate developers and owners. Commercial real estate has been hit hard by the pandemic, as many offices, hotels, malls, and restaurants have seen reduced occupancy and revenue. Some analysts warned that commercial real estate could be the next subprime crisis that triggers a financial meltdown. On the geopolitical front, tensions between the U.S. and China continued to escalate. The two countries exchanged sanctions and accusations over human rights violations, trade disputes, and Taiwan's sovereignty. The U.S. also announced that it would send more troops and weapons to the Indo-Pacific region to counter China's growing influence and aggression. These developments raised fears of a potential military conflict or a Cold War that could disrupt global trade and stability. So how did the stock market react to these events? Well, it was a mixed bag. The S&P 500 didn't drop below its December low in the first quarter of 2023, a market indicator that has historically signaled a bull market. However, the index also experienced some volatility and corrections along the way, as investors balanced optimism and caution. The top growth stocks this month were a diverse bunch: social media giant Meta, and semiconductor leader Nvidia. These stocks benefited from strong earnings growth, innovation, consumer trends, and market leadership. The worst performers this month were mostly financial stocks, such as Bank of America Corp., JP Morgan Chase, and Wells Fargo. To sum up, the fourth week of April 2023 was a busy but good earnings week for investors. The big tech earnings results were mostly positive, but there were also some negative surprises from UPS and commercial real estate-related bank failures. The U.S.-China conflict also intensified, adding more uncertainty to the global outlook. The stock market performance was mixed, with some sectors outperforming others. What do you think of these events? How did they affect your portfolio? Let me know in the comments below. Thank you for watching and happy investing.